Today, we're going to talk about a totally different way of thinking about investing. We're going to tune out all the daily noise, all the market chatter, and focus on a strategy for building real, lasting wealth. Today, we are going to build a machine. So, let me just ask you straight up. Are you playing the market? Trying to time things, hoping you can guess the next big thing for a quick win? Or are you thoughtfully, patiently building a machine that's designed for one single purpose? To create lasting wealth for you and your family. Because believe me, there is a world of difference between those two mindsets. Welcome to another video on investment basics. The principles we're going to be digging into today come from the work of Mr. Majid Butt, who has this really fascinating background as an accountant, a software programmer, and an investment researcher. We're going to unpack his entire framework for creating what he calls a personal compounding machine. And hey, you're definitely going to want to stick around till the end because we are going to walk through a super practical, actionable checklist that pulls everything together and helps you actually put these powerful ideas into practice. So here's our game plan. First, we need to really wrap our heads around the sheer power of compounding. That's the blueprint for everything. Then, we'll get into the actual assembly instructions for building your machine. After that, we'll talk about its critical power source, dividend growth. Then we'll watch the machine in action to see the incredible results. And finally, we'll go through that investor checklist I promised you. All right, section 1, the power of compounding. You really have to think of this like the physics behind creating wealth. It is the fundamental law that makes this entire machine even possible. If you don't get this part, nothing else we talk about is going to work. So what exactly is compounding? It's actually beautiful in its simplicity. It's the money that your money makes, which then gets added back into the original pile so that the new, bigger pile can make even more money. You see? It's not just a straight line up. It's a virtuous circle. It's an upward spiral that once it gets going is working for you 24/7, even while you sleep. And this table right here, this really brings it to life. So let's say you invest $1,000 and it earns 10% a year. With a simple return, meaning you take the profit out each year, you've got $3,000 after 20 years. Not bad, right? But now look over at the compounded column. Just by putting those earnings back to work, that same $1,000 grows to over $6,700. The profit from compounding alone is almost 3 times bigger. And you can see how that gap just gets wider and wider and wider over time. That's the magic right there. Now, if you want to see just how mind-bendingly powerful this is over a really long time, get this. Back in 1626, Manhattan was famously purchased for about $24. If that $24 had been invested at 10% a year, any guesses what it would be worth today? $31.2 quadrillion. I mean, that's enough to buy, pretty much everything on the planet. It's an insane example, of course, but man, does it show you the unbelievable power of time and compounding. And look, this is not some new idea. The legendary Baron Rothschild famously called compound interest the 8th wonder of the world. Even Albert Einstein supposedly called it the greatest mathematical discovery of all time. When people that smart are that impressed, we should probably pay very, very close attention. Okay, on to section 2. We have the blueprint. We understand the physics. Now let's get our hands dirty. It's time to actually build your machine. These are the assembly instructions for a system that's built to last. So, there are 4 core components here. First step, recognize your humanness. You have to design a strategy that takes your own emotions out of the equation. Fear, greed, impatience, they are the absolute worst enemies of an investor. So the machine has to run without your emotional meddling. Second step, demand growth. We need growth of both our principal, our initial investment, and the income it produces. Not just some fixed income that gets eaten alive by inflation. Third step, harness compounding. This is where you make the conscious decision to reinvest your income and embrace time and patience as your greatest allies. And the fourth and final step, seek risk-adjusted returns. You want to find high-quality investments that are easy to hold for the long term without making you want to panic sell every time the market gets a little shaky. Now for section 3, we've got the machine designed, we know the components, but what actually makes it run? What's the fuel? What's the engine? Well, the hidden key to making this all work is something a lot of investors just completely overlook: dividend growth. I love this way of thinking about it. Dividend growth isn't just a nice little bonus you get, it is the very electricity that powers the entire machine. It's the active driving force that makes everything else we've talked about possible. It's what turns a static pile of stocks into a dynamic, living, growing engine of wealth. So why are dividends so critical? It's because of what the legendary investor Geraldine Weiss said, dividends don't lie. Think about it. A company can get pretty creative with its accounting on an earnings report. They can massage the numbers, paint a rosy picture, but to pay you a cash dividend, they have to have actual, real cash in the bank. And to increase that dividend year after year after year, well, that business has to be genuinely healthy and growing. It is the ultimate signal of a company's true financial strength. And just look what this means for your income. Let's say you buy a stock with a 4.5% dividend yield, and that dividend grows by 10% every year. By year 10, you're getting an annual income of nearly 12% on your original investment. Now let that sink in for a second. Your income alone is now higher than the long-term total return of the stock market. And that's before a single penny of appreciation in the stock's price. This is that power source at work. Okay, let's move to section 4 and see what this all looks like when we put it together. We've built the machine, we've plugged it in. Now let's watch it run for 20 years and just visualize the incredible output. We're going to look at 2 different scenarios, both starting with a $1 million portfolio. So in this first scenario, you're taking all the dividend income and spending it. So even without reinvesting a dime, look at what happens. That dotted line at the top, that's your annual income. It just steadily climbs year after year. And the bars at the bottom show your principal, which grows from $1 million to over $3.2 million. So you're taking cash out to live on every year, and your machine still more than triples your initial capital. Pretty amazing. But now for the main event. What happens if you don't spend those dividends? What if, instead, you pour them back in to supercharge the machine? Just look at that curve. The same $1 million portfolio doesn't just grow, it explodes. It goes absolutely parabolic, skyrocketing to over $12.7 million. This is the compounding machine running at full power. So the whole story is right here, side by side. Withdrawing the income, you get a fantastic 44% return. Not bad at all, but reinvesting it, you get a staggering 1,271% return. Your final nest egg is 4 times larger, and your final annual income stream, almost 3 times bigger. The difference is just astronomical. That is the unbelievable power of reinvesting that dividend electricity to fuel your machine. And that brings us to our final section, your investor checklist. We've seen the theory, we've seen the jaw-dropping results. Now, here is the operating manual you can use to put these ideas to work for yourself, just like I promised. Okay, let's go through this checklist point by point. First, it's not about playing the market, it's about becoming a partner in a business. That's it right there, the core mindset shift from gambler to owner. Number 2, compounding is a building with bricks, which themselves make bricks. What a great way to put it. That's that beautiful self-perpetuating cycle we talked about. Number 3, even annual returns of 10% can produce gains of nearly 600% in 20 years. Just like we saw in that first chart, modest, consistent returns become truly extraordinary with time. And number 4, time is all you need. Time and a sensible investment that makes maximum use of compounding. This is the bottom line. Patience isn't just a virtue in this game, it is your single most powerful asset. And let's keep going with the manual. Next up, create a compounding machine. Don't play the market. In other words, be a builder, not a bettor. Then, the operator is just as important as the machine, and this is that critical reminder to keep your own emotions in check and just stick to the system. Next, dividend growth is the energy that drives the compounding machine. Yep, that's the true fuel for your wealth engine. Dividend growth is the true signal of a prospering company. Why? Because as we now know, dividends don't lie. They are proof of real cash profits. Next, dividend growth pushes up the price of a stock, which leads right into the next point. Stock prices should theoretically rise in a percentage increment equal to the amount of dividend growth. This explains the mechanics of how the machine grows your capital. And finally, reinvestment brings you more and more shares. And that, my friends, is the key that unlocks that exponential, explosive growth curve we saw just a few moments ago. So there you have it. We've covered the blueprint, the components, the power source, and the operating manual. You have everything you need to start thinking like a builder instead of a player. So the only real question left is this. Now that you have the blueprint, what will your machine build?